Let's switch gears now and talk tech. Uber's $5.2 billion loss in the last quarter was a once-in-a-lifetime hit, according to the CEO, Dara Khosrowshahi. But do investors still feel the company's in the driver's seat? Joining us now to talk this and other tech and media stories, Bradley Tusk, the CEO of Tusk Ventures, and New York Times corporate media reporter Ed Lee, who is also a CNBC contributor. I want to talk about Uber, but Ed, I first want to start with you because we thought there might be an announcement this morning of a massive merger between CBS and Viacom.
CBS and Viacom. It's something we've been waiting for. There's a higher chance it's actually going to come today. If not today, it's this week. If it's not this week, it's probably not happening.
Not happening ever?
It's going to happen. It's going to happen. It's Sherry Redstone. She wants this deal to happen. The last thing that they're trying to dotting the I's is really just the exchange ratio, which is really the fundamental part of this, right? How much CBS shares are Viacom worth? I think the last time they discussed this 2 years ago was about 0.61 CBS shares for every Viacom share. I think that's where they still are. I think that's part of the Viacom wants it a little higher, of course. CBS is saying, well, you know, your shares are already trading with that baked in, so let's go back to
and Masthead, any executive payouts, that's all settled?
Well, yes, chances are Ianello stays on, and he probably gets his $70 million, you know, for not being named CEO. That's pretty astounding. He gets to stay and keep the money. So
Bradley,
that's what my sources have been telling me lately.
Do you think that a CBS Viacom merged is a stronger company?
Yeah, I mean, I think when you look at all the consolidation, everyone was terrified of Disney right now after acquiring Fox and launching a streaming service. Yeah, I mean, everyone just keeps arming up, and if you want to be able to continue to compete, you've got to keep doing that. So it does make sense.
I think it's just to get to par, right? I don't think it makes them stronger so much as it just puts them on a field where they can at least play with the other guys. Compete. Yeah, exactly.
But the industrial logic is obviously get bigger to go after Disney, but can these organizations actually merge themselves effectively? Can they actually put these operations together and make them work? Or are they just going to be two big things? So
I think it's a great question. I think the industrial logic plays usually with media companies is can they tie themselves up enough where when they go to the cable operators and the dish and the satellite operators say, hey, do they have enough heft to extract higher fees? The thing is, a lot of these deals have already been worked out. So the next time those renewals come up, it's a completely different world. I don't know that you get an advantage by having more channels in your lineup. I think what they can do is that they have a deeper bench, they have more resources, they have more money to play with. If they can take a deeper run into over-the-top streaming, CBS has one, Viacom has this ad-supported one called Pluto. If they can really sort of make it more than just an experiment, then they've got a chance.
We will wait to see if we get that announcement. In the meantime, Bradley, as an Uber shareholder, you know, you have one-time hits and then you have once-in-a-lifetime hits. I mean, are you confident that this is in the latter?
Well, I now understand why they want to stay private for so long. Fundamentally, I think for the company to really be profitable, it can't just be Uber Eats, it can't just be ride sharing. They've got to be that A to Z of transportation. So whether you're getting yourself from point A to point B on a bike, a scooter, a car, or a bus, whether it's furniture being shipped on a truck or a burrito, you know, from a messenger, they've got to be the default for all of that to really reach the profitability that they want to be at. So do I think they can get there eventually? Yes, but as a shareholder, am I concerned? Absolutely.
But do you think investors would be more willing to give Uber a break for what they're billing as a technical charge for issuing more stock this quarter if there were a clearer path to profitability in the long run?
Yeah, I mean, I think clearer path or even just some sense that the innovation that the company was famous for in its early days is back, right? When Uber kind of switched from a focus on kind of ruthless innovation to kind of kinder and gentler, I think that solved a lot of problems, but it seems like it may have created some new ones. And I think whether it's Dara or someone else on the team, there's got to be some more belief by the market that they're going to be able to be the first on all these things.
If you take out this one-time noise, right, with this one quarter hit, though, fundamentally, where is this company going where it becomes profitable? This transportation as a service idea where they get more closely aligned with mass transit services, basically, where they become sort of this operating system for mass transit. Is that really where they're actually making profit at that point?
It's got to be what they've been saying for a decade now, which is Amazon for transportation, right? It's got to be the same way that so many of us just default. I need something, I go right on Amazon, I press a few buttons, I get it. It's I need to get somewhere, I go on this platform. I need to get something, I go on this platform. If they can be that, then the future's unlimited for them.
Investors have been listening to that and obviously originally bought into that and thought that was really exciting. but there's no catalyst to actually prove that they can deliver on that.
Right.
And so what is that catalyst?
Well, I think a few things. One is they've got to be able to demonstrate new revenue streams. So things like Uber Freight have to become a much bigger deal. But the other thing is, I really do think as someone who I started investing and working with Uber in 2011, they've lost their mojo. And I understand why they made that change, but clearly there's not a lot of confidence in leadership.
Are you now now you're back to being a Travis fan?
I think that at the very least, some of what Travis represented in terms of innovation and change and intensity is lacking at the company.
But you
now
called it ruthless innovation, and in large part, Khosrowshahi was chosen because he is not ruthless.
Right, and the stock is clearly reflecting that. So there's got to be some world where you cannot have a culture of harassment and an uncomfortable work environment and yet still be able to really innovate and compete. I think now we've had one, we've had the other.
I told you that the model unto itself is a hard one, and that maybe they get there, but that this is a 10-year journey.
Yeah, well, it depends on what you think about things like car ownership, right? So if you think that, like, I have a 13-year-old, she's never once yet mentioned getting a driver's license. If she never really does, and that's typical, and maybe it's not because we live here in Manhattan, but if it is, and ultimately everyone's going to get around some other way, then Uber and Lyft also really have just scratched the surface of what can be. But if it stays the way it is, it's much harder.
But Bradley, given your point that you think Uber needs to make all these other business lines grow to give it the scale to be profitable, do you think Lyft, therefore, is going to go bust? I
think it's much harder, yeah. I mean, I think Lyft obviously had a less bad quarter than Uber did, and so the share reflected it. But ultimately, Lyft is a U.S.-only ride-sharing business, and I think it's really hard to achieve a big vision at the kind of valuation they want to have with just that.
What happens if I told you that Lyft, given that it is a more focused business, let's call it, has a better chance of getting picked off or bought from an acquisition strategy? Whether you're a car manufacturer, whether you're in computer AI or something else where you say, I want to be in this space. This is clean.
Yes,
I can take
but it's going to be a big company, right? I mean, Lyft's valuation, although a lot smaller than Uber's, is still bigger than most car manufacturers. So one of the challenges, generally, this is both true with kind of late-stage companies, but even sometimes when we're in the middle of, say, we've invested in a startup at Series A, and by D, it's a unicorn. That's wonderful, but then I have this problem of, I don't really think anyone can acquire them at this point because it's too expensive, and IPO is the only path. So you run the risk of pricing yourself out of that.
If you're right about your 13-year-old and she never wants to drive a car, and I hope that's what it turns out.
I hope so too.
Then there's room for both of these companies in the world. There's going to be tremendous demand. The real question that I think was asked here is, what is the capacity of Uber today to actually write its culture and execute on its vision? Because that's where it's struggling, and it's going to continue to struggle into earnings and meeting its objectives until it solves that problem.
Well, they've already had, just in the last few months since they've gone public, I think the COO has been removed, the head of marketing has been removed, they've had layoffs in the marketing division, they just froze hiring of engineers. So there's a lot of kind of turnover already at the leadership ranks. Clearly, they don't have what they need to do the latter part of what you said. I do think they fixed their culture in terms of things, it's a better place to work. But fundamentally, they've got to be able to demonstrate that they can really innovate.
I'm going to put a note for 3 years from now in my calendar to come back and see if your daughter has changed her tune on that. Thanks to both of you, Bradley, Tusk, Ed Lee. Appreciate it.